Very good afternoon to all of you. On behalf of WSB of ICI of Institute of Chartered Accountant of India, I welcome you all in today's VCM on clause by clause discussion on CARO. Dear members, this is our second part of the VCM on the clause by clause discussion on CARO. As we all are aware that we have divided all the clauses in 21 clauses in different parts. Five clauses we have covered day before yesterday, and five clauses we are going to cover. Six clauses we are going to cover today, and 10 clauses we will cover day after tomorrow at 3:30 p.m. Today we are having two eminent speakers, CA Yagnesh Desai ji with us and Sandeep Dinodia ji. Sandeep Dinodia ji will join us later. And due to the certain emergent meetings, our honorable chairman and vice chairman sir are not in a position to join. So we are having with us CA Yagnesh Desai ji. It is my proud privilege to share with all of you the brief profile of CA Yagnesh Desai ji. He is a member of the two professional institutes, Institute of Chartered Accountant of India and the American Institute of Certified Public Accountant. He has been practicing since August 1983 and has wide knowledge of audit of corporate and taxation methods. He is actively associated with activities of Institute of Chartered Accountant like IFRS trainer for the certification course of INDES conducted by the Institute of Chartered Accountant of India and trainer for diploma in the IFRS examiners conducted by ACA of UK. He has composed and delivered e-lectures for accounting standards for the Institute of Chartered Accountant of India, and he's a speaker on accounting and auditing standards at various seminars of the Institute of Chartered Accountant of India. He has also delivered motivational speeches at various national conventions and students and conferences, and have trained many CPAs of Philippines on IFRS. In, in between 2009 April till date, he has delivered 1,092 sessions and seminars in about 40 cities in India and abroad. This is his 193rd session on various technical topics. Recently, he has been awarded Icon 2021 of Mumbai City by Times Group, and he has also
Recording
completed
in
sustainability
progress.
report course and possessed the examination as well. So we are having with us here Yagnesh Desai ji. Yagnesh ji, on behalf of WSP of ICI, I extend my warm welcome to you once again for sparing your valuable time and for your technical advice and expert opinion on CARO 2022. So without wasting much more time, I request CA Yagnesh Desai ji to please deliberate on the topic as we are going to cover five clauses today. So over to Yagnesh ji, please.
Thank you so much, Anilji, and I'm thankful and grateful to the Auditing and Assurance Board of ICI for having given it an opportunity to share whatever I know in the CARO 2020. And uh, besides, then I respect and I welcome all the participants, which I gather is more than 3,500. That's a great number, and it's great marketing efforts by the AASB. And I'll be feeling very happy. And जैसे कहते हैं हिंदी में, if you allow me to, मैं अपने आप को कृतज्ञ समझूंगा ये मुझे आपने मौका दिया. Thank you so much, Anil ji. And Anil ji, I must say something about you, that you have been very consistently and very meticulously. You have been always following with us, and we
Thank you,
really
sir.
appreciate for the great professional approach. So without doing too much
Thank you,
ado,
sir.
let me start today. Okay, friends.
Yes, sir.
Yeah. Okay. Friends, I'm going to deal with three clauses of CARO 2020. Number one, clause 3, subclause 3 of clause 3, that is investment, guarantee, security, any loans and advances. Now, there is one word which you have used earlier also, advances in the nature of loan. Advances, loans in the nature of advances. So that is the typical word. The loans in the nature of, that is known as the advances in nature of all loans. So I had made an abbreviation of AIL, advances in nature of loan. I will be calling it AIL for sake of brevity. Um, then I have made some table which will make your life very simple, that whether this part is covered in the schedule 3, division 1, 2, and 3. Yes. Uh, if yes, then I have given the numbers, otherwise no. Then also I'm giving you some reference as to which is this section of the Companies Act and maybe the related accounting or the auditing standards which will be applicable to such thing. Now, as far as first item is concerned, it is not covered in the Schedule 3, but it is covered by section 187.3 and 4. Clause number 5, as well as clause number 3.5 is concerned, acceptance of deposits. Friends, this standard, this clause has remained same except one word, the innocent looking word called deemed deposit. And deemed deposit is a very wide subject. I have devoted more time, more slides to this word deemed deposits, and I'm sure you'll agree with me. It deserves a larger attention. There is no disclosure requirement in the Companies Act except this section 73 and 76 of the Companies Act. And the last one is a related party, that is subclause 13 of clause 3. Yes, it is covered in something called additional regulatory information under the revised division 1, 2, and 3 of Schedule 3 to the Companies Act. And the related accounting standards are AS 18, Ind AS 24, subsection 76 of section 2, section 188 of the Companies Act 2013, and last is the standard on auditing 550. So these are the abbreviations used by me for this, and these are the relevant sections covering all the whole gamut of my presentation. Section 179, 80, 180, 185, 186, and 187. Now, in case of the Ind-AS compliant companies, remember that guarantee by parent to the subsidiary for which parent has not charged the commission fees to the subsidiary should be accounted for as per Ind-AS 109. And I recognize my friend and a very senior chartered accountant, Mr. Venkat Subramani. He will be smitten to hear about this section of Ind-AS 109 because he is an expert in the financial instrument. Financial guarantee has to be monetized if not charged by the company. Friends, I made some summary very quickly. This clause is divided into 6 subclauses. Subclause E and F are newly inserted. Whereas for subclauses C, D, E, and F, subclauses C, D, E, and F, the table has been provided by the guidance note CARO 2020 issued by ICA. Whereas subclauses A and E are not applicable to the non-banking finance companies. Let's bisect this. Whether during the year. Emphasis is during the year. So if anything has been given in the preceding year, that is not a concern of the auditor. The company has made investments. So first is talk about the investment. And the moment I talk of investment, my dear friend, it reminds me of section 186 of the Companies Act. Because the investment by the company has to be made within the limit of this section 186, and that talk about the 60% of the first limit, and that is the paid up share capital, free reserves, and the security premium, or 60% of these three, or 100% of the security premium and the free reserve, whichever is higher. So be careful about that. Provided any guarantee or security. When the word comes about guarantee, it should remind you of a contingent liability. That disclosure has to be made by the company in the contingent liability. Don't forget about that. Granted any loans or advances in the nature of loans. So I have called abbreviation called AIL, advances in nature of loan, secured or unsecured, whether long term or short term, to companies, firms, limited liability partnerships, or any other parties. Any other parties could include even the partnership firms also. Now, friends, I made a summary of the entire subclause 3 of section 3, and I'm going to share with you, friends. Okay, this has been prepared by my team, not by me, so I give the credit to them. So the subclause A of this clause is dealing with the subsidiaries, associate, and JVs. That clause has two parts: one which is dealing with the subsidiaries, associates, and JVs, and second, not dealing with them. And again, they talk about the aggregate amount of the loan during the year and balances at the end of the year. So that is part A. Number B is whether the loans guarantee investment are prejudicial to the company. Third is about the terms, specified terms. So first is joint venture, associate, and the subsidiaries. Second is dealing with the whether it is prejudicial to the company's interest. Third is about the yes. ऑडियो इज नॉट कमिंग. चलिए मैं समीप आता हूँ लैपटॉप के साथ. ओके, अब इज आई एम आई ऑडिबल टू यू नाउ? नो सर. Is not really this. Is still not audible? Am I still not audible to you? Or you have to still yell? So maybe because of the should I put off my video then? I'll speak louder. Okay, fine. All right, let's speak louder. All right, sure, no problem. Okay. And the last one is okay. The third one is about the term. The fourth is about the overdue. The fifth is about the evergreen. That is, we'll discuss about that. And the last one is when there is no terms and conditions about the loans and advances in nature of loan. So this is how this has been divided into the sixth segment. Now let us see number 1A, that whether during the year, so emphasis is on during the year the company has provided the loan or provided advances in nature of loans. Now again see that clause number A and clause number E are not applicable to those companies which main nature of business is principal business nature of business is giving loans. So basically this do not cover the NBFCs. Now you see then there are these divided into two parts A and B. The similarity between these two A and B is the part A deals with the loans, advances, guarantees given to the subsidiaries, associates, and JVs, whereas part B is not dealing with is dealing with the other than JVs, associates, and subsidiaries. Okay, so this is one thing. Now, what is required? The opinion is not required here. So, friends, when we dwell upon the CARO, we need to ascertain and determine what is required of the auditor. A, opinion. B, just narrating the facts, like reporting the facts. That's it. So here, he does not have to see whether the loans are good, bad, or whether ECL is to be provided or not. Nothing of the sort. All that he has to do is that mention the aggregate amount given during the year and the balance at the end of the year. So part A is very clear, divided into two parts. A, the dealing with subsidiaries. B, not dealing with the subsidiaries. So this very refined document I have to share with you, and I have got many surprises for you, my dear friends, and you'll be very happy to see all these surprises at the end of the day, which I'm going to share with you. So
कौन सा
let's
अकाउंट
start.
खोले थे
Okay.
पे खोलो ना कौन सा अकाउंट देखिए आप स्टेटमेंट
So
नहीं
please,
दिया ना
very binti hai, kindly put
नहीं
off
दिया
your mic,
स्टेटमेंट
please.
मतलब
Now,
प्रिंट
part B is concerned that is concerning about prejudicial to the company's interest. This clause was there earlier also. Now, what is prejudicial to the interest of the company? Okay. Now, here again, the auditor has to say yes or no. But here, an element of opinion will be there, okay, whether they are prejudicial or not. He simply does not have to mention that the loan has been given, the amount, outstanding, overdue, nothing. But this expects some kind of an opinion from the auditor in the sense whether they are prejudicial to the interest of the company. Now, what could be the prejudicial to the interest of the company? It has not been defined per se, but it is to be implied. Now, giving a loan without the proper security, giving the unsecured loan at a rate that is
अरे
meant
हमें
for
क्या
the secured loan. Zanab, can you please request the participants to please mute
अरे
themselves?
पांच तो पार्टिसिपेंट है एक दो तीन
Zanab, please,
एक
please mute the participants, please. So here they need to see that sometimes the secure loan in loans carry the lesser rate of interest, whereas unsecured carry the higher rate of interest. But the company may have given the loans without security and at an interest which is otherwise meant for the secure one, and maybe the terms which are far more beneficial to the borrower rather than to the company. So this is known as a prejudicial to the interest of the company. Friends, I must tell you one thing, and I always insist in any seminar and lecture or any deliberation on the CARO 2020 that you must read the guidance note issued by the ICI on CARO 2020. Friends, this is one document which I invariably read when we finalize any company's account, because this is one document which is given the guidance in the threadbare and very well laid out. It has given the format of the forms format of the reporting requirement as to how you should report that, and is one thing which you should not lose sight of. You must refer to the CARO 22 guidance notes issued by this. Many of the slides contents have been attributable to this guidance notes. So I give credit to ICA guidance notes, which is of immense help to all of us in our office. All our partners, engineers, and articles have been provided with the hard copy of this book. Now this is applicable even to the NBFCs. Now, the point is whether it is prejudicial to the interest of the company or not is a matter of fact and circumstances. But here, the auditor has to apply its wisdom and see, give a kind of an opinion that yes, they are prejudicial or not prejudicial to the company. For example, the company gives the interest-free loan to the employee of the company. Now, if it is a policy of the company, then you cannot say that it is prejudicial to the interest of the company, because that is meant for the entire segment of employees of the company and not applicable to only one or two. Uh, Friends, about Section 186 of the Companies Act, which says that the company has to recover the minimum interest which is applicable to the government securities for 3 years, 5 years, or 7 years. I got a very good document, very good circular. Despite the fact that it exempts employees of a certain category, I'll just write in my reminder list to share this with you. The circular number, it was of 2015, general circular. I'll share with you, friends. Then we talk about the clause C. Now, clause C is about the term. Clause C is about a term. First is about the joint ventures, associates. Second is about the prejudicial. Third is about a term. Now, let us see this. In respect of loans and advances in nature of loans. Now, what do you mean by advances in nature of loan? I'm sure many of you must be aware of this. आप चाहे मुझसे विदित भी होंगे, but फिर भी I feel like sharing with you what do you mean by advances in nature of loans. Let us take an example that you are giving an advance to your vendor, okay, and to your supplier, to your vendor. The terms and conditions are that he normally delivers this in a 6 months' time, but you give him an advance at least 1.5 years ahead of the date of supply, or maybe 2 years. All right, the cost of an equipment is about say 10 lakhs, and you have given an advance to your supplier, to your vendor, for 15 lakhs, for 20 lakhs. So this is known as advances in the nature of loan. कहने के लिए वो advance है, मगर वास्तव में वो है loan. For the sake of saying it could be an advance, but actually it is a loan. In substance, it is a loan. That's known as advances in nature of loans. Whether schedule of repayment of principal and payment of interest has been stipulated, and whether the repayment of the receipts are regular. So this talk about the whether the terms and conditions for the repayment have been specified or not. But when you see clause number F, you will see no terms. That means the loan or the advances in the nature of loan is of such a nature that they have not prescribed the payment schedule. Now, here again is not a question of an opinion, but it is a question of narrating the facts by the auditor. Now, what if no such agreement or the arrangement or the agreement or arrangement does not contain any schedule of repayment? And what about the advances in nature of loans which do not normally contain the schedule of repayment or the payment of interest? Very true. When you give a loan, when you give an advances which is actually in the nature of a loan to the vendor, to the supplier, there is no question of any interest as such. What happens in this case? Uttar hai uska answer is in the next line. The auditor shall report that there is no stipulation of this schedule of repayment of principal and payment of the interest, and may report that he is unable to make the specific comment on the regularity of the repayment, because you have not mentioned the terms of repayment. Then how can you say they are regular or irregular or else? And the second one is that advances in nature of loan normally do not contain the schedule of repayment, and the payment of interest are required to be reported under these days. So nothing is required to be reported as far as interest is concerned, but only you should mention the facts. Now here you don't need to mention about whether they are prejudicial or not, because that is already been covered in subclause B. Now, subclause D, overdue. And that too, what's it? More than 90 days. So again, to repeat, the first clause is about the subsidiaries, second clause is about the prejudicial, third clause is about the term, and the fourth is about the overdue. If the amount is overdue, state the total amount, how much is overdue for more than 90 days, and whether reasonable steps have been taken by the company for the recovery of the principal and interest. Here, an opinion of the auditor matters. ये केवल ये केवल is not required only for narrating the facts that the amount is overdue and it's overdue more than 90 days, correct? But more than that, what are the reasonable steps? Now, reasonable step does not necessarily mean the legal steps. If the company has reminded or if there is a guarantee given, then company is either invoking the guarantee or not. This clause does not state about the guaranteed or unguaranteed, secured or unsecured. But in case there are any security given by the borrower, in that case, you need to see that whether the company has taken the steps to invoking the guarantee or not. When has not been received on the due date as per the lending agreement. Now, here this will definitely is inextricably connected with this clause, because the schedule of repayment of the principal and the payment of interest, and if those have not been paid on time and more than 90 days have lapsed, then you have to give this detail. It is not to be necessarily be legal steps. Depending on the situation of the case, you should say that whether they are reasonable or not. So this is talking about not the narrating the facts, but also an opinion of the auditor, that whether it is reasonable or not. Friends, my dear friends, the CARO guidance has given the specimen of the reporting, and both kind of things, whether positive and negative. So one must always go through this. Then this is the new clause. Now this new clause, I have put my word here, evergreening. Now let us read, see. Now evergreening word, those who are dealing with the bank audit will understand it very clearly, that what do you mean by evergreening. This is not applicable to the companies whose principal business is to give the loans, so not applicable to NBFCs. Whether any loans or advances in nature of loan granted and which has fallen due during the year. Now, here is not talking about the loans given during the year, but what is due during the year. Has been renewed or extended for the fresh loan granted to settle the overdue of existing loans to the same parties. If so, specify the aggregate amount of this thing, and again the percentage. Aggregate amount of such renewed and or the extended or the settled by the fresh loans. Now, this means what, sir? One loan is due to us, to the company, say 10 lakhs. It is fallen due during the year. We are talking about financial year 21-22. It is due on 21st December 2021. But that borrower is not been able to pay. So what he tells you, sir, I will give you 10 lakhs rupees, which is I'm supposed to pay, but you do me one favor. Next day, you just pay me this money back. Okay, so effectively he is not repaying. Effectively he is not repaying. So they say dues renewed or extended or settled by a fresh loan and the percentage. So one, you have to see how much loan is the of such nature which has been renewed just immediately. So it's a whitewash, that is the old loan has been paid back to a new loan has been given by the company. Now in this case, um, you don't need to stop at determining the amount, but you need to go one step further. The suppose such loan is about say 25 lakhs, and the total loans given by the company including this is about 1 crore. So then you have to give the percentage. So the percentage of the loan which has been renewed immediately is 25%. Now this is what say is inserted to identify the instance of evergreening of the loans and advances. Okay, is not been defined, but it has been accepted from the common parlance. Now, here for this, as I told you, for 3 C, D, E, F, the subclauses C, D, E, F, the standard has given the is given the format in which one should be reporting. And if possible, I'll share this with you, sir. Okay. Yes, this is. I've not done any big job, but only my team has put it into the Excel format, and that will be, friends. We have given here the page number of the PDF and the book number, the book which I'm referring is the guidance note. So this they have given for subclause F. They have given also for subclause E and D and C. So for subclauses C, D, E, F, this guidance note has given the format, Excel format in which you should do that. Now this my team has put it into the Excel format, which I'm going to share with you. Why this only? In fact, we run it for the all clauses wherever there is a format given by the wherever there is a format given by the guidance note. So we have reduced it to the Excel format to make your life simple. And this is the last clause which has been added new, and this again is talking about the no terms. Now, no terms of the repayment, either payable on demand or payable without specifying specified any terms or the period of the repayment. Now, in this case, you to give the aggregate amount of this thing and percent it to. Not only that, dear friends, don't stop here. Go to the third step. First step is find the amount. Second is percentage to the total amount of the loan, and the third is loans granted to the employees, to the promoters and the related parties. Now, the promoters normally, in the common parlance, we normally think that they are the one who has signed the memorandum and article subscribed, but they are not. In fact, they have been defined under section subsection 69 to section 2 of the Companies Act. Section 2 defines the give the definitions. Again, you need to see the SA 550 and also in the AS 24 and in this 18. Now here they have defined the promoters. Okay. Now this again has given, as far as this F is concerned, they've given the notes. They've given the Excel sheet. Aggregate amount of loans and advances in the nature of loan, repayment on demand, and agreement does not specify. You have to classify in these two categories: one which is repayable on demand, and second for which does not specify the any term of period of repayment. Now this is to all parties, this is to the promoters and the related parties. So this is the format in which you need to report for compliances or the non-compliance of subclause F. And again, friends, in all these cases, the loans which has been squared up has to be taken into consideration. Normally, friends, what we do that we look at the final balance sheet, and if item is not appearing in the balance sheet, if the loan is not appearing in the balance sheet, we tend to forget or miss out this thing. So then you have to see what is the opening balance, what is the additions during the year, what are the repayments, and what's the final balance. So don't please forget to look the accounting details, and those the companies which are being listed, then you have to follow the LODR requirements. Again, this is something which auditor should examine the register of guarantees any maintained by the company. Friends, there's a very good statement, and this statement is published by Bombay Chartered Accountant Society, and I salute BCA for such a wonderful document. जी हाँ दोस्तों, and this document is giving the forms, form number, the purpose, the timeline in which it is to be filed with the MC. I've seen, friends, that most of practicing chartered accountants, allow me a minute, please. Who are not into the company law practice because they have outsourced it to the company secretaries. They normally don't look at these forms which are submitted, required to be submitted, and this will help auditor a lot. For example, when it comes to the related parties, okay, you should look at the form number MBP1. Based on MBP1, there is an MBP2 register. When it comes to deposit, it is DPT3. Okay, when it comes to the charges, it is CHG 1, 2, 4, 7, and all kind of forms. So we must look at all these forms and the registers, which is mandatorily required to be maintained by the company. And as I was mentioning to you about the wonderful document published by BCA, and if possible, I'm going to share this with you. So this is going to be a gift. ये मेरा तोहफा रहेगा आपको, that will help you a lot. It's kind of a ready reckoner. Immediately you come to know that, oh, if it is related parties with the directors, look at MBP1 form, because every directors have to give this declaration of his related parties on the first meeting of the year, or whenever he becomes the director. Okay, so then DPT3 form also must, then MSME forms are there. So many forms are there. You must look at these forms. दोस्तों आपके लिए ला रहा हूँ वो forms, and this please read those things. Then checking compliances with the other objects, other standards, other sections of the Companies Act. Like as I told you, 186, that no investment shall be made, or a loan, or a guarantee, or a security given by the company unless the resolution sanctioning is passed at the meeting of the board. And very important, at that board meeting, all the directors who are present must give their consent. And one more thing, friends, if they do, and the in some cases, as per the section, include obtaining prior permission of the FPFI, public financial institutions, ensuring that the rate, and again very important, the rate of interest is not lower than the prevailing rate of interest. So 1 year, 3 year, or 5 year, or 10 years government securities bonds. So friends, uh, when you are preparing the CARO, you must have with you the Companies Act and rules on the one hand, and on the other hand, the CARO GN 2020. Now, this is one thing where I have debated and deliberated a lot of time on this topic. Friends, one few words, deemed to be deposits, deemed to be deposits, just एक दो तीन चार अल्फाज है सर, but ये 400 के बराबर है, 4000 के बराबर है, because there are a lot of things which is considered to be whether it is deemed deposit or not. It may not be deposit, but it will be construed as deposit as per the Companies Act, Chapter 5, as well as Chapter 5 of the rules. Majority of the Companies Act is in the rules rather than in the act itself. So rules are equally, or rather say, I would say, more important. And I have tried to deliberate in detail. Now let us see Section 73, 74, 75, and 76. But very important sections which are dealing with the deposits. The limits of the deposits are there in Section 73 and Section 76. So those two friends, I was making the reference to the deemed deposit. As the word indicates, they are not deposit per se, but they are considered to be deposits. For example, a company has got an advance from the customer. The company has received an advance from the customer, and in a year's time, the standard said within 365 days, the company has not been able to supply goods or services. So this remain as on the liability side, advance repeat received from the customers, maybe current liability. Okay, and in terms of the financial instrument, this may not be considered to be the financial liability, because the onus on the part of the company is to deliver the goods and services and not to repay. So Mr. Venkat Subramani, if he's there, he will agree with me that if the onus is not to give the cash or any other financial assets of the company, it is not a financial liability. So it will be classified as other liabilities, not a financial liabilities. Within 1 year, company has not been able to supply goods and services. Then the standards say that you are allowed further 15 days time, and you have to repay this money in about, say, then 380 days from the date of receipt of this deposit. And if you don't do so, this will be considered as a deemed deposits. And my dear friends, there are huge penalties for that. Second example is the advance money received against the share application money. In this case, the company has to allot the shares within 60 days, or if you fail to allot the shares, then return the money back to the applicant within next 15 days. So you are given a maximum 75 days time. If you don't do so, it will be considered as a deemed deposit. Now here, for this standard, for this clause, I would say you should always insist on form DPT3, which I believe is to be filed before 30th June of every year, and that is to be filed by all the companies. Very critical addition, deemed deposit. And for this, Rule 21C of the Company's Acceptance of Deposit Rules 2014 is very important, which states all the exclusions. Now, as I told you, the section 73. So when you say that, it does not talk about the deposit, but also the deposits and also the deemed deposit. Now, which companies can borrow the money as a deposits? One is section 73 of the Companies Act, which talk about any company. And that is about the deposit from the public company, including public company. And the last one is the eligible company. Acceptance of deposit from public by certain public companies. Now here we'll see that they have defined under section 73, and to be more specific, those who are interested in great learning should refer to subsection 2 of section 73 and rule 3 of the chapter 5, rule 3 of the Companies Acceptance of Deposit Rules 2014. Ran's standard is this clause is such a great important that I would take one day to dwell upon that. Type of companies which can accept the renewed deposits. Now they talk about eligible company. Eligible company has to be a public company, and which is covered in section 76. Whereas section 73 talks about company, any company, which includes private company and public company also. But section 76 talks only about public company. Oh my dear, not public company, eligible public company. Now, what is eligible public company? That is defined in section in subclause E to clause 2 of section 73 of the Companies Act, and which says that the company has to pass a resolution before accepting any deposit. Now, when we talk about the resolution, immediate helping verb is, or the query is, whether special or ordinary. Now, again, this draw attention to subclause C of section 1 of section 180. 180 into bracket 1 into bracket C, which says that about 100% of the paid up share capital, then the free reserves and the security premium, or 60% of the security premium and the free reserves. So within that limit, if the amount of the deposit is within this limit, okay, then ordinary resolution, otherwise special resolution. But there are some more limits. We'll see that. Computer G, let's see. Private company can borrow only from members or directors or their family members or promoters or their family members. Conditions apply. When a company borrows from the directors or their immediate family or their family members, they have to, the directors or the person who is giving loan to the company have to give an undertaking that they have given this loan deposit to the company from their own savings and not from any borrowings or not from any advances or not from any loans. This is very important. My dear friends, just make sure that you have this kind of undertaking pressed on the record and it is there with you if the company has borrowed money from the directors. Now, when a company borrowed money from the directors or the relatives, there is no limit applied to it. We'll see which limits the company has to otherwise be abide by. Whereas I may be rummaging through your few slides as to what kind of deposits can be accepted. It's not applicable to banking companies, housing finance, subsection 2 of 73. A company, it does not say private or public, may subject to passing a resolution in general meeting. Friends, remember that is this advice is not from the perspective of the CARO 2020, but even from the perspective of the Companies Act 2013. Make a habit that you pass certain resolutions in the first week of April. One of them is this: authorizing company to pass to this company to borrow money as deposits. Second is related party transactions. Third is investment pursuant to section 186 of the Companies Act. These resolutions, my dear friend, you must pass in the first week of April, because then you are giving the company throughout the company the authority which is envisaged by a couple of sections of the Companies Act. Sorry. Then there are very stringent requirement of subsection 2A to F, which is not applicable to the company. Now here is the table. Limits of the amount of the companies can accept as a deposit. Members, private company, 25% of the paid up capital, or the this later on this has been enhanced to 100% of the paid up share capital in the free reserves. Public company, 25% of the paid up capital and free reserves. Now there is a difference between the public company and eligible company. these two companies, private company and public company, are covered by subsection 2 of section 73, whereas the eligible company is defined under section 76 only. Okay, now you see what is eligible company. It has to be basically a public company. Okay, and 10% of the paid up capital, and this is the limit. But the point is that this is defined under section 76 of the Companies Act. Now this company, see the difference, this company can, eligible public company can borrow money and accept the deposits from the public. Otherwise, if a company is not an eligible company, and there is a limit of some kind of turnover, like for example, the net worth is not less than 100 crores, and turnover is not less than 500 crores. If if it is a public company, the net worth has to be 100 crores or more, and the turnover has to be more than 500. Then it is considered as an eligible company. But I would also say that an eligible company is the one which is meeting the compliances of those threshold limits of 100 crores of net worth and 500 crores of the turnover. But besides that, it has passed a resolution, and before accepting this deposit, it has registered this deposit with the MCA. You may ask me a question that MGT 14 requires the resolution to be passed with the company is a special resolution the company has to pass. But what if the limit of section 180 into bracket 1 into bracket C is not crossed? So in that case, the resolution required is the ordinary resolution. Whereas when these limits are crossed, you to pass a special resolution. But regardless of whether it is an ordinary or a special, company has to register this with the ROC before it accepts the loan. Now, analysis of Rule 3. Sir, this is very important, and even if it may take little more time, I will request you to give me some time to do this. Now, friends, as I told you, analysis of Rule 3, very important. It has got proviso 1, it has got an explanation, and it has got proviso 2. तीन चीजें आपको ध्यान रखनी है. I have made a thread-bed analysis of Rule 3 of the Company's Acceptance of Deposit Rules 2014. Rule 3 sets the limit of 35% of the aggregate of the paid up capital and free reserves and security premiums on account of the company. Now, Proviso 1 says it enhances the above limit to 100%, provided that a specified international financial center company, public company, and a private company may accept from its members. Now, again, private company can borrow only from members, not from public. दोस्तों आपके लिए मैंने एक बहुत सी अच्छी स्लाइड बनाई है. It says a company can borrow money from whom? Can a company borrow money from HUF? Answer is no. Can a company take a deposit from the LLC? Answer is no. Can a company accept deposit from a proprietary concern? Answer is no. It can take from the person, the owner of the company, from his savings account, but not from the current account of the proprietary concern. Okay, friends, now let us see. And may accept from its members money is not exceeding 100% of the aggregate. So this is the limit of 25% has been enhanced to 100%. All right, we'll call such companies type A. Proviso 2 further enhances the maximum limit, sir. Proviso 1 enhances from 35 to 100 and proviso 3 और भी ज्यादा ले जाते हैं. कहाँ पे and how? It enhances the maximum limit. Let's read, computer G, let's read. Provided further that the maximum limit in respect of deposits to be accepted from the members, mind you will again members, shall not apply to the following classes of private limited companies. Private companies. When we in the colonial language say private limited company, but the Companies Act says only private companies. Private company which is a startup company for the 5 years from the date of incorporation. A private company which fulfills all of the following conditions. All three must be complied with. A. The borrowing of such company from the bank is not more than twice the paid up share capital. अगर पेड अप शेयर कैपिटल 10 लाख है तो 20 लाख से ऊपर नहीं ले सकते. अगर 20 लाख से ऊपर है तो ये further enhancement of limit will not be applicable. But आमतौर पे we know that the private limited company has a paid up capital of just 1 lakh only. All right. Sorry, I missed out one item, which is not an associate, a subsidiary company of any other company. Now, the Act has simply said now this. Now, whether it is a subsidiary of a foreign company or not, it is not mentioned. But to be on safer side, if the company is a subsidiary of the foreign company, then this clause will not be applicable in my view. ये मेरा मंतव्य है. And such company has not defaulted in the repayment of such borrowings subsisting at the time of acceptance of deposits. So in that case, sir, if everything is good, there is no limit. We will call it type B company. Type A company is 100% of the aggregate or the paid up share capital, free reserves, and the security premium. Type B company, which is here given by proviso 2, and this is there is no limit. So, friends, when you are talking about giving the reports, you must ask your client a question. Hey, is your company a startup company? If it is a startup company, then life is jingalala because there is no application of this deposits requirement to such companies. So, ask this question. And if this is a startup company, you won half the battle. Now, this they have defined what you mean by deposit amount received from the. They say that does not include following. Very important. This is very common that from the commercial papers and all this ICD amount received in pursuit of the subsequent of the security. Now, here I told you if it has been allotted within 60 days, no issue. If not allotted but repaid within 60 days, fine. If not done, make the payment. If not allotment, if not no allotted, if no allotment or no repayment, then within 15 days pay it back, else it will be considered as a deemed deposit. Now, this is very important. Who at the time of receipt of the loan, receipt of the amount was a director of the company or a relative of the director of the company. Now, provided they furnish to the company at the time of giving money a declaration in writing to the effect that the amount is not being given out of the funds acquired by him by borrowing or accepting loans or deposits from the others, and the company shall disclose the detail of suit. Very important, sir. इस बात का जिक्र बोर्ड रिपोर्ट में होना चाहिए. I have seen many companies, sir, when they have accepted deposit from the directors, they say, sir, हमने ये ले लिया, writing में ले लिया, but when it comes to board of directors, they failed out. So just keep in mind, if you're doing this work yourself, make sure that this is included in the board's report. Otherwise, no. Now, what if the person ceases to be director? Now, the word used by the act is amount received from the person who at the time of receipt. That means he gave the money deposit on 15th of December and 31st of December, he is not a director anymore. This exclusion will still apply. Amount received from the bonds, that's fine. Received from the employee of the company not exceeding the annual salary. Now, this is where you should see there has to be a contract. Non-interest bearing amount and held interest. This was earlier or held interest, but now they've changed it and held interest. This is very important that as an advance for supply of goods and provision of the services, then it is advance received in connection with the consideration of property under the agreement. Now, here there is no limit of 365 days. A property under an agreement or arrangement. So the builder companies are exempt. Otherwise, they have to close the deal in 365 days. Very important. A security deposit for the performance of a contract for supply of goods and provision of the services. That means if then you have to define that whether it is really a security money, but don't try to play around because companies act now are companies ROC is now sending many people for the inspection. Long-term projects very important in capital goods. This is very important, sir, and we recently experienced this, sir. Honestly, I am not a complete man like Remus, but then we found that in one of our clients' case on aging analysis, we realized that hey, this money was received about more than 365 days, but then we realized that this is nothing but actually the company was dealing in the capital goods. The company was dealing in the capital goods, and then we got a sigh of relief. Okay, so see also the nature of business of the company. If they are dealing in the capital goods, this is not applicable. That means advance received from the customer, and even if more than 365 days elapsed, it will not be considered as a deemed deposit. Then about the succession, the point which I want to dwell upon here is this, and that they say in case of item covered under A, B, and D becomes refundable, then within 15 days they have to pay this money. Otherwise, it will be considered as a deemed deposit. However, the advance referred to A shall become deposit after 15 days. As far as A, B, and D are concerned, it becomes refundable. But when it comes to A, that means what is A, computer G? It is this for supply of goods and provision. Now, I don't know the answer, but many companies have faced in the COVID-19 situation that they have received the money, but they were unable to supply the goods because of the supply chain disruption, and sometimes they were willing to pay this, supply goods, but the buyer was not willing to take it. But uh, uh, the grapevine says that ROC may take these cases in a very lenient manner, and they cannot be very strict about such situation which is covered in the COVID-19 era. Now, amount brought in by the promoters, which is defined under subsection 69 of section 2 of the Companies Act, uh, but then too it is eligible available only up to the time till the loan of financial institution or the banks are repaid, and that has to be imposed by the this condition has to be imposed by the bank or the financial institution. And this is the definition of the promoter, not just the one who signed the agreement or the memorandum has been named in such prospectus as identify the company in annual return. This annual return is also one thing which should return. Friends, this document which is being prepared by the BCA, again, I salute BCA and you must read that because that will make your life jingalala. Okay, the person who has control over the company other than the one who acting in the professional capacity, and in accordance with whose advice, directions, or instructions of the board or the board of directors of the company is accustomed to act. Now, this is a very wide term. There are few companies in India whose board of directors are so influential that they can perhaps influence any other company in India. And this is about the needy companies and all this. Fine. Cheat funds, this is common, not covered. Now, again, this is for the receiver by view of a convertible note. So, friends, honestly, I was confused. I said, why this is 25 lakhs rupees loan is there when the proviso 2 enhances the limit from 35 to 100 and 100 to unlimited infinite for the startup companies, correct, sir? But then, my dear friend, this is the difference by view of a convertible note. Friends, startup companies have got many exemptions, and one of them prominent is subclause 10 of subclause 56 to 10, subsection section 56 to 10 of the Income Tax Act, that also exempt the startup companies from the premium received on the issue of shares. Now, this deposits cannot be accepted, which is payable on demand, payable within 6 months or more than 36 months. So, deposits cannot be repaid on demand, cannot be repaid within 6 months, and cannot be the term cannot be more than 36 months. And the second slide says which kind of deposits are permissible. Short-term deposit. Again, there's a threshold of 10%, and which is not repayable earlier than 3 months, not more than not before 3 months, but at the same time not more than 6 months time, not more than 6 months time. And the list of persons from whom company can or cannot accept deposits: shareholders, members, yes; directors or relatives of the directors, yes; employee, yes, subject to certain conditions; any other individual cannot accept because it is prohibited by the definition of a private company. Private company cannot borrow money from persons other than the shareholders or the directors. Achha, now the question arises that if a person is a director, okay, जनोदिया साहब नमस्कार, मैं क्षमा चाहता
नमस्कार
हूँ
जी,
मुझे
नमस्कार। हाउ आर
5
यू?
मिनट की थोड़ी अवधि, 5 या 10 मिनट की थोड़ी अवधि दीजिए बिकॉज प्रोग्राम थोड़ा
Good.
लेट
No, no,
चला।
please finish. I'll get a. I'm sorry I was not there earlier to hear you, but thank you.
नहीं, आप तो मैं कहूंगा आप आए बाहर आगे सर। Now, proprietary firm, they cannot. Suppose I have a company called YM Design Company, and I'm giving loan to my company. This is not acceptable. But if I transfer money from the company to my savings account and then I give the loan to the company or to the deposit of the company, this is acceptable. HUF, don't take loan from the HUF. Partnership firms, no. Any company, yes, but then but also comply with subsection 79, 3 of section 79 and 185. 185 also talks about the loan to the directors or the person in whom and the directors in whom the other people are interested. Banks, yes. Under trust, yes. Outside India, yes. But then you apply the FEMA rules, external commercial borrowings, and all of these. Government organizations, yes. So these are some examples which I have given you, that from whom from whom they can accept and they can. Now, sir. Now, sir, there is whether the transactions with related parties are in compliance with section. Now, this portion, this part is dealing only with the narratives by the auditor, and that to what, sir? Whether they have been disclosed properly or not, whether they have been disclosed properly or not. And I think I've given examples of paragraph 20 to 27, and uh, and maybe 14 to 27 when it comes to the AS 24 and in this 18. You to see the this disclosure part, and okay, so this part is it was there earlier, no change. It was same as the earlier CARO 26. Now, whether all transactions with the related parties are in compliance with 177 and 188 of the Companies Act, Section 188 of the Companies Act is not applicable if the transactions are a D in the ordinary course of business. And again, if there is some threshold of various transactions, you must see that in that case, the company should have the directives from the board of the companies. As I told you, certain standards, certain sections, you must have the uh, authority, the board must have authority of the company in terms of deposits, in terms of loans, and in terms of the related party transactions. And again, investments. So you set the limit, and you cannot say the company can invest anything beyond 10 crore rupees. No, you say a company can invest up to 15 crore rupees. That's it. You be very specific and don't. Yes, it is here. So AS 18 paragraphs 20 to 27 and in this 24 paragraph 14 to 27. These are the paragraphs which are very relevant for disclosures under section 188, because this say that the details have been disclosed in the financial statement as required by the applicable accounting standard. Friends, when you deal with CARO 2020, you have to deal with not just the accounting, not just the Companies Act, but you have to also deal with the auditing standards, you have to also deal with the accounting standards. And CARO would be incomplete without the reference to the Companies Act. So your knowledge of CARO has to be, knowledge of the Companies Act has to be very good. Just a minute, friends. Now, if you allow me a minute, I'm going to share something with you, and I'll do that. And this, as I told you, I'm going to share with you. Just a minute, please. This is not here, it's at the top. This is one Excel sheet in which we're going only for this, but okay, now this is one Excel sheet wherein we have put all these formats of the table which has been required to be disclosed, prepared by the relevant paragraph. For example, this is dealing with paragraph 3.1c, this is with 3.3, then this is 3.3d, this is f, you see, then 3f, then again paragraph 5, okay, paragraph 4. So like this, all these tables have been reduced to the Excel file, Excel sheet which will be shared with you. We have also prepared the checklist of CARO. Checklist of CARO. You know, the standard, the CARO 2020 guidance notice is given the checklist of the CARO at the end of the book, but it is in the PDF format. What my team has done, they will reduce it into the Excel sheet so that when you want to treat this to your client, just a minute, please. So when you want to deal with your client, when you want to share details, or when you want to solicit the information from your client, this will be of a great help to you, sir. Then, as I told you, I'm going to share with you the BCA document, which is like a very important document. Yes, it is here, my dear friends. And for that, the credit goes to Bombay Chartered Accountants Society. This, friends, can you see the all? Can you see this all, please? Hello. 1% company, 1% company. Then again, applicable to the conversion from bonds to this. Sir, there was one gentleman who came with a suggestion that, sir, I have taken a loan of rupees XYZ. It was within the limits of the borrowing limits. So, and then I converted this loan into the equity share. So the loan was 5 lakhs rupees, much below the requisite limit. And at the end of the year, before the year end, the company has converted this loan into the equity share. Now, the biggest mistake done by that company was that conversion is possible, no denying. I think pursuant to Section 62 of the Companies Act. But at the time of issue, at the time of borrowing these funds from the whoever lender is there, company must stipulate that this loan may be converted into the equity share at the discretion of the borrower. Got my point, sir? So this is one form which I wanted to share with you. Okay. Now this form will tell you as to what SHG form. That this is the form dealing with the charge of the company. So MGT 7 is very important, and MGT 14 is very important because you find ADT 1 is the appointment of the auditor, resignation of the auditor. You need to find ADT 3. Okay, that is covered in the CARO. Then DIR 11 form, DIR 12 form. So all this MGT 14, the filing of resolution and the agreement with the register of companies. So if you are looking for the the company which is covered in the section 76, which is known as eligible company, then you must ask, hey, where is MGT 14? You get my point? Because then only you can justify, not otherwise. So Mr. Moderator or anyone from the ICI, if you are there, then ask you can I ask you permission to end my
Yes, sir.
session?
Kindly say, sir.
Hello. हम
Yes,
क्वेश्चन
sir.
आंसर ले रहे हैं? Are we taking the question answers, or we are paving way to
Sir,
the second?
we are taking the question answers, and because the some issue is in the office of the Sandeep sir also, so he's saying he will take the seminar till the battery last, because there is no electricity over there. So it is better to take the next session, and we will come back to you at the end for the questions.
So should I stay back?
Is it fine, sir?
What's it's fine. Should I stay back till 4:30? Sorry, 5:30.
Maybe you can join in again at 5:30.
Okay, I have no issues. I'll join again.
There's a big storm in Delhi. I don't know where you are.
I am from Mumbai.
You're from Mumbai, so there is a storm.
Anyway, let's not waste time of Mr.
Yeah. And
okay.
I'm in Connaught Place. The whole electricity in Connaught Place is gone.
Oh my God.
So I'm on inverters now. I don't know how long it will last.
You last long, don't worry. What are your topics, sir?
So my topic today is CARO clause 4.
Sir, 185, 186 है तो छोड़ दीजिए, I'll take it. Don't worry. आपका मैं फुल कर दूंगा.
अच्छा ठीक है. 185, 186 तो आप
Anyway, friends, everyone, it was really a pleasure deliberating before you, and thanks, sir. It's over to you, Dinesh.
Thank you.
I'll stop sharing my screen. As also the.
Due to the thunderstorm. Yes, sir, you are there. Sir, you are. Can you hear me?
Yes, I can hear you. Should I share my screen?
Hear me, sir?
Parth, you are here. Can you hear me? Mr. Parth, can you hear me? Yeah. Can you hear me? Hello. Sir, network issue. Can you hear me? Hello, can you hear me? Sandeep sir, you are there?
Yes, I am here. I have shared my screen? Can anybody see it?
Yes, sir. Yes, sir. It is there, sir. Make it full screen, sir.
Just a second.
Pura nahi aa raha, sir. Due to the thunderstorm and heavy rain, connectivity issue is there.
Yes, very bad. So now
yes,
is it
sir.
full,
Heavy
now
rain
is it
is
full,
going on at the this place. That's why connectivity is going again and again.
yes, in
So, so once
I don't-
again, sir, welcome on behalf of WSB of ICI.
Thank you.
It is my proud privilege to share with you a brief profile. Sandeep ji has completed his Bachelor of Commerce from Shri Ram College of Commerce from Delhi University in 1986. He is a fellow Chartered Accountant of Institute of Chartered Accountant of India since 1984. And Mr. Dinodia is on the board of directors of many large public listed companies as an independent director, offering invaluable guidance to the company's policies of the good corporate governance and helping solve the compliance issues with the myriad of laws under SEBI, Companies Act, and FEMA. He is in his capacity and assurance head of SRD. He has been involved in the supervisory statutory audit, internal audit, tax audit, due vigilance, management audit, banking institution, and large public and private sector companies for more than 35 years. So still Dinodia ji to please deliberate, sir.
Thank you, Anil ji. Thank you so much.
Please, sir. Please.
So can you see my screen?
Yes, sir. Yes, sir. But full screen करिए sir. वो अभी stable है.
नहीं, full screen ही है. Can you see it? Can you see
उसमें नहीं आ रहा सर कुछ भी. उस पे क्लिक करेंगे अभी तो वो आपकी वो विंडो आ रही है सिर्फ. Mr. Parth, can you see?
Okay, I'll start again.
सर ये आप हाँ स्क्रीन को दोबारा हटा के दोबारा करेंगे तब आएगा सर.
अब आ गया?
अभी नहीं. अब आ गया सर. आ गया. फुल स्क्रीन कर दीजिए सर. अब आ गया. स्लाइड शो कर देंगे आ जाएगा.
Enable editing. Click on enable.
Is it now full screen?
Mr. Parth? No, it's not full screen, sir. Make it F5.
वही करा है मैंने. मैं फिर करता हूँ.
Enable editing. Stop. Click on it. Click enable editing on the top.
Sir, start at this slideshow, sir.
Okay. Right.
Now I've done slideshow. Is it showing full now? Okay.
Yes, sir. Yes, sir. You can start, sir.
All right. So thank you for giving me this opportunity to make this presentation on the new CARO amendments and the new auditor's report that will be implemented with effect from 1st April 2021, and which is applicable to all the balance sheets that have been issued for 31st March 22, which we are all in the process of finalizing these days. And we are all struggling a little bit with understanding the new CARO rules, very different from what they were in our times. So the institute is making us study at all stages of our life, which is good. And I'll try to give in my perspective for the clause 4 and clause 9 of the CARO Act auditor's report relating to section 185, 186, as well as for default in payment of loans. These, I'm sure everybody is very familiar with now the 2013 Companies Act 185, but since the CARO report is very in-depth looks at the auditor's responsibility in terms of commenting on all the issues that are there in compliance of 185 and 186. I'm going to take liberty to make a short presentation on the two sections and what they really require us to do. So 185 has the company is prohibited to advance loans, including any loan represented by a book debt or give any guarantee or provide any security in respect to a loan to the following persons: any director of the company, any director of the company's holding company, or any partner or relative of such director, or any firm in which such a director or relative is a partner. Conditional loans, which are not prohibited but which can be given with some conditions, are for eligible borrowers, person in whom directors interested would include section 185(2), any director of the lending company or of the company which is a holding company, or any partner or relative of any such director, any firm in which any such director or relative is a partner, any private company of which such director is a director or member, and so on. So I'm sure I don't need to read through it because everybody is aware of section 185(2). Conditions to be fulfilled for conditional loans: special resolution to be passed by members of the company in a general meeting, and loan to be utilized by the borrowing company for its principal business activities only. Exempted loans from the ambit of section 185, loan to an MD or a whole-time director, which is a part of his conditions of service extended by the company to all its employees. This is very important. Or pursuant to any scheme approved by the members by a special resolution. So if the shareholders of the company have approved a scheme for giving a loan to the MD or whole-time director by a special resolution, then it is possible to give such a loan. Loan by a company which is in the ordinary course of its business provides loans or gives guarantees or securities for due repayment of any loan, and in respect of such loans, and interest is charged at the rate not less than rate of prevailing over 1 year, 3 year, 5 year, or 10-year government security closest to the tenor of the loan. Loan or guarantee or security by a holding company to its wholly owned subsidiaries. This is allowed. Guarantee given or security provided by the holding company in respect of a loan made by a bank or financial institution to a subsidiary. So, which means that the company can give a loan to a subsidiary, can also give a guarantee to a financial institution who gives a loan to its subsidiary, provided that loans made under clause C and D are utilized by the subsidiary for its principal business activities only, which means that you can't give a loan to your subsidiary and the subsidiary then invests it into a further step down subsidiary or uses it for any purpose that is not the principal business activity of the subsidiary. Penalty for contravention of 185 are very strict. The company shall be punishable with a fine of not less than 5 lakh rupees, which may extend to 25 lakh. Every officer of the company default is punishable with imprisonment. A director or the person to whom the loan is advanced or guarantee is given in connection with the loan taken by him, or the third person shall be punishable with imprisonment, which may extend to 6 months, or a fine which will not be less than 5 lakhs. So these are very strict penalties. So we have to be very careful that the companies and our clients are educated on the provisions of 185. Is extremely important, and they don't make a default even inadvertently while applying these provisions. Now, in the guidance note, a very comprehensive guidance note issued by the Institute of Chartered Accountants India, which I must compliment them, that they've thought about a lot of issues that could have arisen while we are making the CARO audit report. But I'm going to highlight few of them because of paucity of time on what are the various provisions, audit procedures and reporting procedures that we should take care of while reporting on 185 compliance. We should obtain, first and foremost, obviously, we must obtain a list of directors or persons in whom the director or the company is interested. Reference may be made to form MBP 1, which every director has to submit to the company, and a register maintained under Section 189 of the Companies Act, where related party transactions are noted. Obtain and check details of transactions carried out with such person, including of any guarantee given and security provided. Examine details to find out if any transaction is attracting provision of Section 185 of the Act. If the transactions are covered under the exemptions as provided, and I have given just before this slide, under Section 185 of the Act, obtain necessary evidence in support of such exemption. Example, loans to directors are prohibited under Section 185, except, as I just said, to the MD or full-time director as a part of condition of service extended by the company to all its employees, or pursuant to any scheme approved by a special resolution. So wherever there is an exception to 185, where a loan has been given by the company, as an auditor, we should take full supporting evidence in support of the same. The auditor should report the nature of non-compliance, the maximum amount outstanding during the year, and the amount outstanding as at the balance sheet date in respect of the directors to whom loans are given, any person in whom the director of the company is interested, and specify the relationship with the director concerned. That is, in summary, about 185 of the Act. And in this clause of 4 of CARO, we also have to look at and the compliance of 186 of the Companies Act, which talks about intercorporate loans and investments by the company. Subsection 1 of the section prohibits a company to make investments through more than 2 layers of investment companies, except in the following cases: where the company is acquiring a foreign company and such foreign company already has investments in subsidiaries beyond 2 layers as per the laws of such country. So this is only applicable when you are acquiring a company in a foreign country, where a subsidiary is having investment subsidiary to meet requirements of any law rules made thereafter. So where a subsidiary, this means that where a subsidiary is required to invest into another subsidiary to meet the requirements of law. Limit of intercorporate loans and investments. Subsection 2 permits the company to make the following up to 60% of the paid up capital and free reserves and securities premium, or 100% of its free reserves and security premium, whichever is more, by passing a unanimous resolution at the board meeting. It's very important to note that it is a unanimous resolution. That means all the firstly, in the board meeting where the resolution is passed, a proper quorum must be present as per the articles of the company. And then all the directors who are present at the meeting must unanimously approve to the resolution for making this investment. It is not necessary that the directors who are not present must also approve, because it is a unanimous resolution of the board meeting, of the directors present and voting in that meeting. Give any loan to any body corporate in aggregate of that limit. Give any loan or providing security in connection with a loan to any other body corporate in aggregate. Acquire by way of subscription, purchase, or otherwise securities of any body corporate. A company can exceed the aforesaid limit by passing a special resolution with prior approval of the concerned public financial institutions where the term loan is subsisting. So if you have the company has a public financial institution term loan, then it has to take a prior approval from them if it wants to exceed the limit of 60% or 100% as stated above to give a loan to another corporate entity. However, passing a special resolution is not required in the following cases: where loan, guarantee, or security has been provided to a wholly owned subsidiary or a joint venture company, investment of securities in a wholly owned subsidiaries. So wholly owned subsidiaries or joint venture companies are exempt from passing of the special resolution. Uh, 186 requires that the company shall disclose to the members in the financial statement full particulars of the aforesaid loan, investment, security, or guarantee including those which are exempted to be approved by a special resolution. So I may go back to the earlier slide that these loans given to a subsidiary or a joint venture or investment in securities of a wholly owned subsidiary are exempt from special resolution. However, they are not exempt from the disclosure. So the balance sheet must disclose all the loans, investment securities and guarantees, and the purpose for which the loan, security and guarantee is proposed to be utilized by the borrower. So this second part is also very onerous, that we have to take the details of and audit these details on for what purpose these have been given. The rate of interest on loan should not be lower than the prevailing yield of 1, 3, 5 or 10 years government securities closest to the tenor of the loan. The company, a defaulting company which has defaulted in repayment of its deposits, including deposits accepted under the previous Companies Act or in repayment of interest thereon, cannot give a loan, guarantee or security till such default subsists. Every company giving a loan or giving a guarantee or providing a security or making acquisition under this section shall keep a register in form MBT2. No company registered under section 12 of the Securities Exchange Board and also covered under such class and classes of company which may be notified by the central government in consultation with Securities Exchange Board shall make any intercorporate loan or deposit in excess of limits specified under the regulations to such a company, pursuant to which it has been obtained a certificate of registration from SEBI. Exemptions from the provisions of this section. Nothing contained in section except subsection 1 shall apply to any loan made or guarantee given or security provided or any investment made by a banking company or insurance company or a housing finance company in the ordinary course of business, or a company established with the object of and engaged in the business of financing industrial enterprises or providing infrastructure facilities to an investment made by an investment company, made in shares and made in respect of investment of lending and by a non-banking financial company registered under Chapter 3B of the Reserve Bank Act, whose principal business is the acquisition of securities. So 186 exempts these companies which are engaged in the business of giving loans. If a company contravenes the provision of this section, the company shall be punishable with a fine which shall not be less than 25,000 rupees, which may extend to 5 lakhs, and every officer of the company who is in default shall be punishable with an imprisonment for a term which may extend to 2 years and with a fine, and shall not be less than 25,000 rupees, but which may extend to 1 lakh rupees. And the offense under this section is not compoundable. Now, friends, we come to the audit procedures which have been recommended by the Institute in its guidance note for checking and giving adequate disclosures in the CARO report and for section 186. These are extremely important for us to understand and implement. The first one, I've given just a summary of some of them, which I think are important. And I recommend that everybody goes through the CARO guidance note and the multiple choice questions that the Institute has taken out on the CARO, which give you a very good insight into how to look at the CARO report and how to go through the CARO provisions. The first one is obtain the details of loans given to any person or body corporate, guarantee given or security provided in connection with a loan to any body corporate or person security. The first one is to obtain the details from your client and the company, as well as the outstanding balance at the beginning and at the close of the year. Then check whether the company has made investment through to more than 2 layers of investment companies, which, as said earlier, is prohibited. Then check whether the company has disclosed full particulars of the loan, guarantees, etc., including for the purpose for which they were made in the annual financial statements, which is again a requirement of Schedule 3 and disclosure of 186 itself. Then check whether the company has passed a board resolution as prescribed and obtained prior approval from the public financial institution concerned. So if it is required to pass a special resolution, has it or a board resolution, has it passed that? And if it has a term loan or a loan subsisting from a public financial institution, has it taken a prior approval from it? Then check whether the loan given to companies registered under Section 12 of SEBI or not. Check if the rate of interest is not lower than the prescribed rate of the RBI for the 1, 3, or 10-year tenure. Check if the company is in default of repayment of any deposits. If so, then it is prohibited from giving any loans or giving any guarantee or security. Check whether the company has maintained a register as per MBP2 in the manner as prescribed, and also check the compliances of other provisions and relevant rules. This, friends, is the reporting format recommended by the Institute in its guidance note, which basically captures everything that we have discussed till now for non-compliance of 186. It gives the investment made through more than 2 layers of investment companies, loans or guarantees given or security provided or acquisition or security exceeding the limits without prior approval by special resolution, loans given at the rate of interest lower than prescribed, any other default. In this, you have to give the name of the company, the amount involved, the balance at the balance sheet date, and then remarks, if any. That, my friends, is all that I have to say about the CARO requirements of 185 and 186 and the disclosures. And I have just very quickly summarized. It's a very huge section. Both the sections are very onerous, and the requirements of the CARO are also very, very deep. And the guidance of the Institute is extremely good. And I recommend everybody goes through it. I just touched upon the major issues which need to be looked at for the compliances. Now, I will go on to clause 9 of the CARO report. There are clause 9 is one of the, I think, the longest clauses of the CARO report, which goes into from A to F, clause 9A to 9F. I will touch upon each one of them one by one slowly, and I will bring out what in my opinion are the important issues relating to each of these clauses. So it's a very long clause, and it has a lots to be checked and reported. The first clause, A, out of the A to F clause, is whether the company has defaulted in repayment of loans or other borrowings or in payment of interest thereon to any lender. If yes, the period and the amount of default to be reported as per the following format. So the Institute has recommended a format which gives the lender-wise details to be provided in case of defaults to banks, institutions, and the government and other lenders, aggregate of each type of lender. For example, if he has defaulted in repayment of interest or principal of a debenture, then it need not give each debenture holder's name. It can just give aggregate of the class of debenture, the way the default has taken place, and then give the further details of amount, principal, number of days of delay unpaid, and remarks, if any. Now, how do we check this? Of course, we have to obtain the schedule of repayment to all the lenders from the management of the company. The schedule should indicate the amount of due dates, including interest, and the company is required to make to the lenders. Lenders include all financial institutions, including NBFC or other borrowings taken from the government, but does not include government company or a public sector enterprise or a foreign government. So there are 3 exceptions to this rule. Loans taken from a government company or a public sector enterprise or a foreign government. The auditor should examine the agreements or other documents, for example, debenture trust deed containing terms and conditions of loans and borrowings of the company taken from all lenders. The auditor should verify the amounts and dates of payment which the underlying bank statement or any advice received from the lenders. Such verification may be done on test check basis, considering the materiality in accordance with the essays the auditor should obtain confirmation from the concerned lender as to the status of the loan account, including the overdue position as at the balance sheet date. The auditor should the auditor come across a situation where there may be disputes between the company and the lender on certain issues relating to repayments. In such situation, the auditor should consider the prevailing terms of and conditions only. However, he may give brief nature of the disputes while reporting under this clause. So if you see the format, the last column is remarks, if any, and this remarks column is extremely important. So wherever you find that you are reporting or you feel that there's no default in repayment of principal or interest, but there is some dispute between the company and the lender, then you can give the disclosure and give appropriate remarks and column. There may be a situation where loans, borrowing, or interest is repayable on demand and no repayment terms have been specified in the agreement. In such situation, the auditor should obtain a management representation letter confirming that such loans and borrowings or interest have not been demanded yet for repayment, and that's why there's no default. The auditor should mention the same in the audit report. The guidance note of the institute I found this very interesting. Suggested language which says that loans amounting to X are repayable on demand and terms and conditions of payment of interest thereon have not been stipulated. According to the information explanation given to us, such loans and interest thereon have not been demanded for repayment during the relevant financial year. So my friends, this is an extremely important clause because we come across this very, very often, where the company has lent to sometime mostly related parties or even its vendors or its customers, and these loans are sometimes open-ended without any stipulation of date of payment, and they're recallable on demand. So these also require now a disclosure under CARO. Borrowings do not include public deposits and preference share capital for the purpose of this clause. So preference share capital is not included in this clause at all. The auditors should report all amounts remaining unpaid as at the balance sheet date, irrespective of when those defaults have occurred. So if it is remaining, suppose that default has occurred in the preceding accounting year, but the default is continuing and the amounts remain unpaid at the balance sheet date, irrespective of when the default occurred, we have to report it under CARO. In case of a reschedulement of a loan has taken place subsequent to the balance sheet date, the auditor should report the default during the year. However, he may mention the fact that there is a reschedulement has taken place post the balance sheet date in the remarks column. So even the reschedulement takes place in May or June, but on 31st March, there is a default. It has to be reported under this clause. Documentation for this clause, of course, is repayment schedule, relevant agreements, management representation letter, and note in the auditor's report in case of restructuring. Now we proceed to the second clause, B, of the audit procedure and reporting for this clause, whether the company is declared a willful defaulter by a bank or financial institution or any other lender. Under this clause, the auditor is required to report whether the company has been declared as a willful defaulter by any bank or financial institution or any other lender. It is clarified that such declaration should be restricted to the relevant financial year under audit till the date of the audit report. So even if the willful defaulter declaration has taken place before the signing of the report post 31st March, we still have to include it in our audit report disclosures. And the Reserve Bank of India White Circular dated July 2014 on willful defaulters had updated from time to time, has defined that a willful defaulter would be deemed to have occurred if any of the following events are noted. Now, who is a willful defaulter? So this RBI's 2014 circular is extremely important for us to know that who is a willful defaulter. That the unit has defaulted in meeting its repayment obligations to the lender, even when it has a capacity to honor such obligations. Second, the unit has defaulted in meeting its payment and repayment obligations to the lender and have not utilized the finance from the lender for the specific purpose for which the finance was availed, but has diverted the funds for other purposes. So you have misused the funds, which is another disclosure that needs to be done in further clauses of this 9 C, D, E, F, which we will come to later. The unit has defaulted in meeting its repayment obligations to the lender and has siphoned off the funds so that the funds have not been utilized for specific purpose for which the finance was availed, nor are the funds available in the unit in the form of other assets. So if the funds are misused and siphoned away, then also we are treated as a willful defaulter. The unit has defaulted in meeting its payment and repayment obligations to the lender and also disposed of or removed the movable or immovable property given by him, or it has for the purpose of securing a term loan without the knowledge of the banker. So if you're given a security of a property while securing the loan from the lender and without the permission of the lender, you have disposed of that property, then you become a willful defaulter. The term lender appearing in RBI circular covers all banks, financial institutions to which the amount is due, provided it is arising on account of any banking transaction, including off-balance sheet transactions such as derivatives, guarantees, or letters of credit. So, to determine that whether the unit is a willful defaulter or not, we have to go to the circular. We have to find out whether we fall into any of these clauses. Then, as an audit procedure, it is therefore clarified that auditors should restrict the reporting under this clause to declaration of willful defaulter by the banks, financial institutions, and in respect of other lenders should restrict the reporting to declaration of willful defaulter by government/government authorities. So we are only looking at a disclosure under CARO, clause 9b, where a willful defaulter declaration is made by banks, financial institutions, and the government. The auditor, when obtaining confirmations of outstanding loans and interest from banks, financial institutions, may include a question whether the company has been declared a willful defaulter. You can also take help from obtaining the latest CIBIL report of the company and verify whether the company has been categorized as a willful defaulter. This is information available in public domain. It has been clarified in the guidance note on page 109 that the auditor should also consider whether the company has been declared a willful defaulter as on date of the audit report. So up to the date of the audit report, you have to see whether he's been confirmed as a willful defaulter. So even if he's not, the unit is not a willful defaulter on 31st March, but has been subsequently been declared as a willful defaulter up to the date of the audit report, still the disclosure would be required under this clause. We go now to clause 9C, which talks about whether term loans taken by the unit were applied for the purpose for which the loans were obtained. If not, the amount of loans so diverted and the purpose for which they were used may be reported. So it's very simple that the companies should use the loans only for the purpose for which they were granted and cannot divert these loans for a different purpose on its own. And if this happens, the auditor's responsibility is to report it under CARO. Under this clause, the auditor is required to examine whether loans are applied for the purpose for which these loans were obtained. Further, the term loans were not applied for the purpose for which these loans were obtained. The auditor also required to report the amount of loans so diverted and the purpose for which it was used. First of all, the auditor should ascertain whether the company has taken term loans. Term loans normally have a fixed or predetermined repayment schedule. In common parlance, the expression loans with repayment period beyond 36 months are taken as term loans. Cash credit, overdraft, call money, account deposits are therefore not covered under the expression of term loans. So this clause applies only to term loans. Reserve Bank of India, wide again circular rate 2014 willful defaulters has defined diversion of funds also would include the following. Utilization of short-term working capital funds for long-term purposes, not in conformity with the terms of sanction, deploying borrowed funds for purposes, activities, or creation of assets other than those for which the loan was sanctioned, transferring funds to subsidiaries, group companies, or other corporates by whatever modalities, routing of funds through any bank other than the lender bank or members of consortium without prior permission of the lender, investment in other companies by way of acquiring securities, debt instrument without approval of lenders, shortfall in deployment of funds vis-a-vis amount disbursed, drawn, and difference not been accounted for. Audit procedures for checking of this clause. A strict interpretation of this clause would mean that the term loan obtained from entities other than banks and financial institutions would also have to be examined by the auditor for the purpose of reporting under this clause. So this clause is a little bit different from the other clauses, because here though it's not very clear in the language of CARO itself, but the institute in its guidance note has recommended that this should be strictly interpreted, and we should take into account all lenders and see whether the loans obtained, the term loans obtained, have been used for the purpose for which the money was lent. It is also not necessary to establish one-to-one relationship with the amount of term loan and its utilization, which means that once the money has come into the bank account and mixed up with the normal funds of the company, that is allowed, and then subsequently, if it has been utilized for the purpose for which the term loan is granted, it will not tantamount to any default. The auditor should mention the fact that pending, in case the company has taken a term loan and the term loan has not been utilized for the purpose immediately, then sometimes there's a gap between taking the loan and actually utilizing the loan. And most companies then put up this money on interest so that the company can earn something and the funds are not idle, and eventually the money is used for the purpose for which it was taken. And the auditor should mention this fact, that the utilization of the term loan has been temporarily used for a purpose other than the loan sanction, but were ultimately utilized for the stated end use. We come to clause D of the CARO 9D, which talks about whether funds raised on a short-term basis have been utilized for long-term purposes. If yes, the nature and the amount to be indicated. This has been an old clause also, where we traditionally as auditors we have been looking at short-term funds used for long-term purposes, which everybody knows is not a very prudent way of running a business. And this clause also requires the auditor to state the nature of application of funds the company has financed long-term assets out of short-term funds. The nature of application of funds can be determined only if the funds raised can be directly identified with an asset. The determination of direct relationship between particular funds and an asset from the balance sheet may not be feasible. Further, such movement of funds should be reported by relevant documentation. A more practical approach would be to determine the overall picture of the sources and application of funds of the company, unless the evident trail is available, and that enables auditor in establishing a direct relationship between source of funds and its application. Also, money is fungible. The auditor may also review the cash flow statement to determine whether short-term funds have been used for long-term purposes. So cash flow statement, which can be prepared, which is prepared mostly by companies at the year end, sometimes gives a very clear indication of whether we have used short-term borrowings for long-term purposes. We come to clause E, the second last clause for reporting of default, whether the company has taken any funds from an entity or persons on account of or to meet obligations of its subsidiaries, associates, or joint ventures? If so, details thereof with nature of such transaction and the amount in each case. So here we are only doing a reporting of such transactions where the company has borrowed funds for further giving loans or investments into subsidiaries, associates, and joint ventures. The auditors need to consider new loans or advances given during the year for meeting the obligations of subsidiaries, joint ventures, or associates companies during the year, and new investments, equity or debt made during the year for the purpose of reporting. So here we are not looking at old outstanding investment. We are only looking at transactions that have taken place during the accounting year under audit. It is possible that the financial statements of subsidiaries, joint ventures, and associates are audited by another auditor. In such cases, the principal auditor may consider seeking specific information from the auditors of the components in accordance with guidance given in SA 600 using the work of another auditor and guidance note on audit of consolidation of financial statement to enable him to report under this clause. Friends, we come to the last clause of audit procedures and reporting under clause 9F, which talks about whether the company has raised funds, loans during the year on the pledge of securities held in its subsidiaries, joint ventures, or associates. If so, details thereof, and also report if the company has defaulted in repayment of such loans. Here, the default has, in the preceding clause, there was no reporting on default. In this clause, there is a reporting on default also. Under this clause, the auditor is required to report whether the company has raised loans during the year by pledging the securities of its subsidiaries, held by it in its subsidiaries, joint ventures and associates. If yes, give details of such loans and report if the company has defaulted in repayment of such loans raised. It is clarified that for reporting under this clause, the auditor is not required to give details of default in respect of loans raised by the company, to give details in respect of loans raised by the company as the defaults are in case to be reported under clause 3(9)(a) for all lenders. Under this clause, therefore, the auditors may be required to state yes or no for default. So details need not be given, because if there's a default, you will already give that default in clause 3(9)(a). Further reporting is required only in case of loans taken during the year. Therefore, loans taken in earlier years and outstanding as at the balance sheet date need not be reported. It is clarified that for reporting under this clause, the auditor is not required to give details of defaults in respect of loans raised by the company, as the defaults are in case to be reported under clause 3(9). Sorry, I've already said that. Further, it is clarified that reporting in this clause would cover all loans taken during the year, even if these have been repaid during the year. Further, reporting is required only in case of loans taken during the year. Therefore, loans taken earlier outstanding in balance sheet date not required. Defaults will include both repayment of principal and interest. So default is of both. It may happen that the lender has invoked the security for repayment of loans. A security is generally invoked where there is a default. Accordingly, such cases will need to be reported under this clause. I recommend the following reading materials. Of course, section 185, 186 of the Companies Act, the Company's Auditors Report Order 2020, the guidance note of the Institute of Chartered Accountants in India 2020, and the multiple choice questions. I found them very interesting to read and very thought-provoking, and they give you the finer point of each clause of its of CARO and what is the requirement and where you can go wrong. So I found the multiple choice question extremely well framed and very, very nice to read and give you guidance on preparation of your audit. Thank you so much.
Thank you, sir, for such a wonderful deliberation. So there are certain questions. If you permit, can we take, sir, questions, sir?
Yes, please.
Sir, Yagnesh sir is also there. Yagnesh sir, you are there? Yagnesh sir, can you hear me?
Yes,
Acha, sir,
I can hear
Yagnesh
you.
sir is also there. Yagnesh sir, you are there?
जी हाँ.
Okay, sir. So I am starting with a few questions. So relevant question may be answered by the relevant faculty, sir. So first question is, sir, sir, first question is intercorporate loan and investment in unrelated company. Does it include intercorporate deposits carrying rate of interest? Hello,
दिनोदिया साहब, ये प्रश्न आपके लिए है.
Sandeep sir.
संदीप जी.
Sandeep sir, you are there? Sandeep sir.
Ignesh, can you answer these questions? I'm just taking a 1 minute break.
Yeah. Can you repeat the question, please? Can you repeat the question, please?
Question is, sir, intercorporate loan and investment in unrelated company. Does it include intercorporate deposits carrying rate of interest?
Sir, पहली बात, the intercorporate deposit presupposes that the both parties, the party which is receiving the loan, giving loan is the corporate company, and the receiving is again a corporate company. Now, whether it is a interest bearing or not interest bearing does not make any difference, but does not make any difference from the perspective of the company which is receiving the intercorporate deposit known as a ICD. But one has to be very careful about section 186 of the company which is giving loan or corporate deposit or intercorporate deposit, whatever nomenclature you use, has to collect the interest uh, depending on 3 months, 6 months, 1 year, 2 years, 5 years, or 10 years government bonds. Remember, friends, that there is no regime of interest free loan by a private limited or a public limited company. Whenever the company gives loan, it has to be an interest bearing loan. Now, whether it is a related party or unrelated does not make any difference. The criteria that the party is related or unrelated does not come into the play about charging of interest on a loan given by the company pursuant to section 186 of the Companies Act. अनिल जी, आप हैं?
Yes, sir. Yes, sir.
Yeah.
So there is one more question. This is for Sandeep, sir. Sir, can you explain accommodation entries and whether these fall within the scope of receipts in the nature of loans subject to section 185 and 186?
So, firstly, I don't understand accommodation entries.
Pardon, sir?
I don't understand the word accommodation entries. But I assume
I was asking about the accommodation entries and whether these fall and within the scope of receipts in the nature of loan under section 185 and 186.
So, if you have given a loan, why you gave the loan is we keep that apart. And as Mr. Desai just clarified, every loan is covered under 185 and 186. And we are assuming that you're talking about loans given. Of course, you can only give a loan intercorporate from company to company. Company to a director or a firm is anyway prohibited unless it's there are certainly you fall in the exemptions. So all these loans, I assume the word accommodation entry means that you've given it for a quid pro quo, that there is some other benefit flowing to you in some other manner. But that is not relevant for the provision of this section, nor is it relevant for the CARO provisions. Mr. Desai, would you like
I
to?
agree with you. I tend to agree with you. मैं आपसे सहमत हूँ. संदीप जी, आपसे सहमत हूँ मैं.
Thank you.
Yes, sir. Sir, if a company has defaulted in paying dividend on cumulative convertible preference shares, should this need to be reported?
That is the preference shares are not reportable as a loan. As the guidance note has also said, that preference shares are a repayment of preference shares or dividend of preference shares is not a loan default. Under these two clauses, clause 4 and clause 9.
If I can add, so first of all, thanks Sandeep ji and Yagnesh ji.
Namaskar, Dr. Sanjay.
Namaskar. Thank you so much for fielding the questions. Yeah, I think the point of view of the member asking the question could also be that under Ind AS, the preference shares are treated as a debt. However, as Sandeep ji rightly said, it should not impact the reporting of loans. So I tend to agree with your answer, but maybe the member concerned has this perspective in mind. Thank you.
Sir, there is
Please go ahead.
Yes,
Go ahead.
okay, sir. Okay, sir. So there is another question, sir. What are the matters to be reported which are not disclosed in the financial statements? And what matters those are disclosed in the financial statements, but auditor has to incorporate or report in such audit report? Yagnesh, sir, this is for you, I hope.
It is very wide question. What matters to be reported and what matters? I mean, can you repeat the question once again, please?
Yes, sir. So what are the matters to be reported which are
Matters to
not
be
disclosed in the financial statements, and what are the matters those are disclosed in the financial statements, but auditor has to incorporate or report in audit report?
Sir, this covers the whole gamut of the disclosure requirements pursuant to the accounting standards and not just CARO. So one has to make sure that the disclosure requirements laid down by various section. For example, when it was about the related parties, I gave you certain paragraphs number, like when it comes to AS24, paragraph 20 to 27, and as far as the Ind AS 18 is concerned, paragraph 14 to 27 covering the related party disclosures. So auditors, in fact, and the company for that matter, does not have a choice about disclosure, what to disclose and what not to disclose. In fact, Ind AS 1 says that the compliance with the accounting standards, including requisite disclosure, has to be there. Otherwise, the company will not deem to have complied with the Ind AS. So मैं समझता हूँ कि प्रेजेंटेशन के जितना ही important है about disclosure of accounting policies and certain items related to the disclosure of an item or a transaction or an event. मैं नहीं समझता ऑडिटर के पास या कंपनी के पास कोई चॉइस है सर कि ये डिक्लेयर करे ये डिक्लेयर ना करे.
That's right. I agree with you.
Yes, sir. Sir, can you hear me?
Yes, I can hear you.
Sir, another question is related.
Now you are lost. Anil ji, you're lost now.
Yes, sir. Yes, sir. Due to the technical issues, sir, due to the
I
rain
understand. I
under.
understand. मैं केवल आपको बयां कर रहा हूँ. ये शिकायत नहीं, ये
Yes,
बयां
sir.
कर रहा हूँ.
Yes,
शिकायत
sir.
नहीं
Yes,
सर.
sir. Yes, sir. Yes, sir. Sir, mobilization advance given to the contractor at the start of the project, whether it is to be considered as loan, sir.
Sir, it is never to be considered as a loan because if you go to see even the company acceptance of deposit rule 5, they also say that these are not to be considered as a deposit, sir. And and in terms of the Ind AS 109 also, I can tell you that mobilization advance is not considered as a financial liability because there is no onus on the part of the company to give something in cash or any other financial assets of the company. केवल उनको ये करना है कि जो पैसे मिले हैं to be discharged against the services to be fulfilled by the company.
And there's no interest required to be put on
No
this.
request, yeah.
The only problem that comes here is section 73, where the mobilization advance remains outstanding for more than 1 year. And then you get.
Sir, if it is an infrastructure company, if it is a company related to the some kind of immobile projects and properties and all these, then there is an exemption in that case, sir.
Yeah. So if you give it for a long-term capital asset,
Capital
the only exemption is for capital assets.
Capital
So if you are giving it for suppose construction of a road, and you're given an advance, you received an advance, and you have not billed for that much for that time. Now it becomes very difficult to say whether building of a road is a capital advance received, which is a long-term project. And if your project is for 6 months and you have kept the advance for more than 1 year, it becomes a deposit. So after 1 year, you'll have to treat it as a deposit.
And sir, Sandeep ji, I like to add one more thing that the subclause 12b says as advance received in connection with consideration for property, an agreement or arrangement provided such advance is adjusted against the property in accordance with the terms of the agreement or the arrangement. यहाँ पे 365 दिन का जिक्र नहीं किया गया सर.
Right. Good. So what you are saying is that for any advance, if I receive as a bayana against a property agreement to sell, And
क्या
that
क्या
agreement,
अल्फाज यूज किया बयाना अरे
हम दिल्ली वाले हैं ना, बयाना ही देते
अरे दिल्ली वाले या बम्बई वाले सब बयाना तो बहुत अच्छा लफ्ज है सर
हैं. So वो इसमें कवर नहीं.
हाँ नहीं
जी सर.
that means real estate companies जो जिसमें है ना but provided is given in the terms of because बम्बई में और बड़े सिटी में देखिए सर आप बिल्डर्स 6 7 7 8 7 साल तक पैसा नहीं दे सर फ्लैट्स नहीं देते सर.
Right.
So there is a question relating to MSME. Companies in MSME sector generally do not maintain stock records. That is the receipt issues balance. Annual accounts are prepared based on the physical stock taking. So they submit to the bank monthly statement of stock and debtors to support drawing power of the cash credit account. So stocks are sometimes exaggerated to support drawing power. How do you deal with this under CARO 2020, sir?
सर इस विषय में जितना कम कहा जाए इतना उचित रहेगा बिकॉज ये कोई रॉकेट साइंस नहीं है ये कोई इतना सीक्रेट नहीं है कि स्टॉक्स से कैसे बैंक में खिलवाड़ा किया जाता है सर तो and I think there is a requirement of CARO. I forgot the particular number, this number, that when the company has been given the term loan working capital facility of more than 5 crore rupees, at that point of time, as per CARO, this is required. That quarterly statement has to be matched with the one given by the company to the bank. They say quarterly. That means quarter ended 30th June, 30th September, 31st December, and 31st March. इनके ही स्टेटमेंट उनको कंपेयर करके दिखाना है एंड you have to then state the fact. That's it.
Yes,
अगर
yes, sir.
नहीं मैच है तो मत कीजिए.
So last question, sir.
मैं इनसे सहमत हूँ कि
Sir,
भाई एमएसएमई में इतनी शिद्दत के साथ कोई स्टॉक रिकॉर्ड नहीं रखते सर. एंड कई बार नोइंगली और कई बार अननोइंगली करना पड़ता है.
Sir, one more question for disclosure of acceptance of deposits. Does it cover the corpus funds collected from the flat purchase in case of a real estate company?
Sir, corpus is corpus to the society. In fact, in that case, the company which is accepting this is only acting as acting as a conduit. It is not collecting for on his behalf. So suppose I have booked a flat with your company. अनिल जी एक बड़ा अच्छा सा मकान बना रहे हैं तो मैं अनिल जी को कॉन्ट्रैक्टर जो बिल्डर है उनको दूंगा पैसा and that in fact अनिल जी will have to deposit this money to the corpus or to the society which is being fogging. So I don't think it is covered under the it would be construed as a deposit because the entity is not accepting this money on its own. So I would say it is accepted in trust and without interest. If you recollect, I have sorry, if there was a word earlier, the phrase was acceptance of deposit. You know, एक minute, sir, एक minute. I'll find out that right away. That item number
Sir,
11, non-interest bearing amount or held in trust. सो लोगों ने बहुत गलत इस्तेमाल किया कि नॉन इंटरेस्ट बेयरिंग अमाउंट दे दिया बट तभी और था देन दे चेंज टू एंड हेल्ड इन ट्रस्ट सो आई वुड से द मनी रिसीव्ड फॉर द कॉर्पस फंड इज काइंड ऑफ money received in trust by the builder.
sir, one more question, if you permit.
Yes, please.
So question is, suppose a company passes special resolution under section 186, then the company can extend loan to its director under section 185 without further making any compliance of one section 85. Sandeep, sir.
So, as I explained earlier, that the loan to a director is prohibited. Firstly, once you can only give a loan to the MD or a whole-time director if it is as per the terms of his employment and as per the loans given by the company in the normal course of business to all its employees. You can't have specially to the whole-time director and MD. If he's not an MD and whole-time director, you cannot give a loan at all. So there also the resolution has to be passed. And a special resolution can be passed and where a scheme of such loans and giving of loans is approved. So it is in the larger picture. It's not to one person. It has to be a scheme that as a company, I'm giving to all my people who are above a certain grade and I can extend up to so much loans. In that scheme, if they're covered, they will be covered. but to a singular director is prohibited, the loans.
Okay, sir. Sir, these were the questions relating to our today's this session on clause by clause discussion on CARO 2020. On behalf of WSB of ICI, I extend my heartiest thanks towards both these speakers, Shri Yagnesh Desai ji, as well as Shri Sandeep Dinodia ji, for sparing your valuable time and acceding to our request on a very short notice for your deliberation. Sir, thank you so much, sir.
अनिल जी एक बात कहना चाहूंगा. पहली बात, धन्यवाद आपको हमें ऐसा मौका दिया. एंड आई मस्ट टेल यू दैट आई हैव शेयर्ड द फॉलोइंग डॉक्यूमेंट्स with you about just 10 minutes back. एक तो complete CARO का PPT, then tables linked in the CARO. Sir, certain things are there in CARO at the same time in the Schedule 3 to the Companies Act also. उनका भी जिक्र किया है कि common items in CARO and Schedule 3. Then checklist again converted into the Excel file. Then interest-free loan for the employees. I mentioned something like that. That I want to say that General Circular number 04 by 2015, dated 10th March 2015. Dated 10th March 2015, General Circular number 04 /2015. This says that a loan, interest-free loan given to the employees are not covered under section 185 and 186 of the Companies Act. And मैं चाहता हूँ कि संदीप जी भी बयां करेंगे कि certain loans are also covered as an exemption in 185 and 186. Am I right, sir?
Right, absolutely.
So thank you so much. And
thank you, sir.
कितनी तादाद में अपना numbers कितने बड़े सर अनिल जी?
Sir, there are more than 5,900 members are live, sir.
Sir, हम नतमस्तक हैं, गदगद हैं, sir. All
5,900 members are here, and I thanks all the members who have joined today's VCM. I request to join all the members to participate in the third session of our this clause-to-clause discussion, which is going to be held day after tomorrow on 1st of June at 3:30 p.m. where our honorable past presence here, Ramar Chopra ji, will also address the
So my request to all the participants, do join when Amarjit Chopra is going to come. And it is not only clause by clause, but closely also. Not keval clause by clause, but very closely, discuss and deliberated. Thank you so much, Anilji and everyone. और संदीप जी मजा आई.
Thank you जी. Desai ji, very lovely meeting you on virtually. But I'm sure we will meet again whenever you
करते हैं कि रूबरू मिले कभी.
रूबरू. बिल्कुल. Thank you.
Okay, Anil. Bye everybody. All participants, have a great evening. God bless you.